Hey, ladies and gentlemen, welcome back to the channel. As always, it is Nick here, back to your daily crypto news and analysis. And today we're going to be talking about Ripple and XRP. And guys, the SEC finally did it. Well, I guess a year later, they went after, well, Do Kwon. This is an announcement just from earlier yesterday. Just in, the SEC charges Terra and founder Do Kwon for fraud. So yeah, this is a very weird time to start this process. But it seems as though this is much bigger than them just going after Do Kwon and Terra, for what you would think would be the right way to do it, but instead they're actually targeting the stablecoin itself, which opens the door for them to actually target other stablecoins as well, which is pretty rough. We're going to be talking about how bad this could be. Now, I did have a little bit of a wordplay on this. I said, so instead of the SEC putting their time and U.S. taxpayer money to good use, they go and sue Terra and Do Kwon a year later. Yeah. So again, this is insane to me that this is happening now. Maybe they want to make sure that they have everything that they possibly can utilize against this entire industry. Because that's exactly what they are trying to do here. So let's break this down. So Lex_node posted this over on Twitter, and he says, "Woo, lad, lots to digest in the SEC lawsuit versus Do Kwon and Terraform Labs. Right off the bat, a very interesting fact is that the SEC is being more thorough than usual, specifically running through the Howey test for various assets, UST, Luna, and Wrapped Luna. And also alleging that M assets are securities-based swaps, which will be no surprise to people who have followed me for a while, have warned repeatedly about since potentially being swaps. We'll post more notes here as I read through the complaints." So down here we do see, so yeah, I think there are at least three first here. Alleging a stablecoin UST is a security, alleging a stock synth M asset is a security swap, and then alleging a wrapped token, Wrapped Luna in this case, is a security. Which this opens the door, by the way, for wrapped tokens to be targeted. I'm sure that you guys are probably all aware that there is a ton of these tokens in this space. You could go over to CoinMarketCap right now, actually, and if you go to the search tab and type in wrapped, look at all of the tokens that come up. So first off, wrapped Bitcoin. Let's go look at the other ones. So as we're searching here, you can see them. Wrapped Tron, wrapped BNB. There is so many wrapped tokens within this space. You could see all of them here. So as we look at this, like, all of these could be considered securities. And there's a lot more than just these 100. So going forward, we also have stablecoins. Alleging a stablecoin is a security. So does that open the door for USDC, BUSD, UST, Tether, which we've talked about many times in the past? Like, what is going to go on with this? And by the way, here you guys have wrapped Bitcoin, the number 19 largest token, almost $2 billion worth. But the stablecoins is the big one, right? Because as we look at Tether, Tether has almost $2 billion tied to it. USDC, $41.6 billion. BUSD, $13.7 billion. This would be a massive wipeout if all of these tokens, aka stablecoins, were targeted. Now also, another first here, not using the Howey test for a token, but instead using another type of enumerated security. As Collins, Belton, and I often speculated would happen. So this is their enumerated security term. In this case, they say Wrapped Luna has a receipt for a security, which itself is a security. And here you guys have the breakdown there. And they're basically saying that, like, this bridges Luna to obtain Wrapped Luna. So it's basically offered and sold as a security. Again, like, a lot of this is, it's opening the door for them to go after other tokens, essentially. We do see you could expect the argument for UST being a security to be a roadmap for how the SEC goes after other stablecoins. Again, opening the door for them to go after other larger projects, cause even more harm to this entire asset class. They will allege that integration, promotion, marketing, commercial deals, etc., building the stablecoin ecosystems are efforts of others that are reasonably expected and can lead to profits in connection with the stables. This is why I've been saying that stables might even pass the Howey test. Never mind other types of security tests like Reeves, despite them being stable. For UST, the SEC also provides an alternative, non-Howey based argument that UST are rights to subscribe to a security Luna and thus are themselves securities. Again, this is an enumerated security type of argument, like the one for Wrap Luna that does not rely on the Howey test. So, yeah, I mean, this is insane. This is absolutely insane, to say the least. This opens the door for a lot more of a crackdown to happen from the SEC. It's only a matter of time, honestly, as well. And it's crazy because we just seen in the last couple weeks the SEC completely go chaotic on crypto. And I do believe that they are going to continue to do so. And I think that they are really turning up the heat right now. I think that the pressure is on. I think that we're starting to see, some sell-off pressure from this because a lot of people are concerned about what's happening. This is to create this picture for the retail sector that, hey, crypto is no good, stay away from it. And I seen Brian Armstrong actually come out and he quoted, on June 1st, 2023, Hong Kong will officially make crypto purchase and sell trading fully legal for all of its citizens. Expect a huge influx of big money from the East. Asian currency-based stablecoin coming out of Hong Kong will be a certainty as well. And there's a lot to this, by the way. There's a lot tied to it, as you guys do see down here. They even do mention the 2017 bull market with Bitcoin, seeing why Chinese yuan pair was still very dominant. People have made fortunes arbitraging yuan pair and USD or US dollar pair. That was gone when China banned crypto, but it will be back soon with even more currency pairs. And yeah, I do believe that this is going to happen. We even do see US dollar stablecoin will no longer be the only boy in town. I envision we trade multiple stablecoin currency pairs, and there will be tons of arbitrage opportunities. And also, by the way, I agree with the idea that we will see a lot more non-US dollar stablecoins. Remember, I just reported on this yesterday when I said about Binance. They do want to utilize non-US dollar based stablecoins on their platform soon. So this is happening. And we do see here, America risks losing its status as a financial hub long term with no clear regulations on crypto and a hostile environment from regulators. Congress should act soon to pass clear legislation. Crypto is open to everyone in the world, and others are leading: the EU, the UK, and now Hong Kong. And yeah, I mean, outside of the US, things are moving extremely fast. And we even see over here, when you have a settlement like the SEC and Kraken, there is no path forward. The fact that Gary Gensler says that is frustrating for those of us that want to be compliant. But you can't do it the way the current structure is set up. And yes, as we do focus on this, the bigger picture here is the fact that we continue to see regulation by enforcement with no clear action, with no clear guidelines, with nothing. Listen closely to this real quick.
And what is your take on what we heard about Kraken last week? We had Gary Gensler on the program, I believe, on Friday after that announcement. And there seems to be a real sense right now that there's lots of different enforcement actions taken. He's saying to folks who are watching our broadcast and others, please come in, register, come on our website, tell us what you're doing, and it'll work. Or I don't know if he's saying it's going to work, but he's saying that is the at least temporary solution. How do you see that?
Yeah, there are a lot of forms on that website, and it's not super clear if you're going to offer a staking as a service, for customers, which of those forms to fill out and how that's going to be regulated. I mean, what we need to do is figure out how to either do a entirely new set of forms or translate the old forms to the new network. It just doesn't simply work to come in and register. And so, yeah, the fact that Gary Gensler says that is incredibly frustrating from those of us in the industry who want to be compliant, but you just can't do it within the way that the current structure is set up. So, I think with something like Kraken, it's even more frustrating with this settlement, because that settlement provides guidance for that specific set of facts and circumstances. It doesn't provide guidance for other companies that are trying to offer this very valuable service, by the way. Like, we want to have proof of stake networks. These are very energy efficient. This is a very popular way to do computing on a large scale and to have those transactions be valid. We want more people to participate in that process. Like, that should be a worthy goal. And so we need to figure out that for consumers that don't want to do this on their own but still want to be a part of the network, we want to figure out a path forward to doing that. And when you have a settlement like we did with the SEC and Kraken, there is no path forward. The path just ends for Kraken, and it leaves everybody else confused as to how to proceed. And so it's really why we need Congress to step in and work on legislation and try to answer some of these questions in a more comprehensive.
And again, you know, we hear, like, we're here waiting for Congress, you know, to step in. The problem is that Congress doesn't want to step in. They want, if they can't control this technology, they're going to try to kill it. They tried to do this with the internet as well. They couldn't control it. They tried to kill it. They couldn't. It was far too big. I believe they're trying to kill crypto. I think that they've seen how big this market is becoming. I think that this was clear in the previous bull run, hitting a $3 trillion market cap. I think it got to the point where it was too big, and they were like, okay, well, now we need to go after it. We need to target this as soon as possible. How do you make a big impact? I can tell you how right now. So let's dive into it real quick. There's 4 things that I want to go over here real quick. 1, I want to talk about this breakdown article from Rosalind Layton, where she talks about everything within the article. It got fully posted by the truth_XRP over on Twitter. It's a full breakdown of the article. There's one section that I want to talk about personally, and then I want to go forward on this. But this is from Rosalind Layton. It got posted over on Forbes, but then it got taken down. And it's titled, Why the SEC Treats Ripple and Ethereum Differently. So I want to quote the article, but this got posted by Cowboy Crypto. There's a lot to this. But first off, we do see a conflicts of interest explanation suggests that Hinman had a financial stake in an entity promoting Ether over competing coins like XRP. A conflicts of interest explanation suggests that Hinman had a financial stake in an entity promoting Ether over competing coins like XRP. Separately, the government watchdog organization Empower Oversight sued the SEC to obtain materials that show Hinman received millions of dollars in retirement payments from his former law firm, Simpson Thacher and Bartlett. And that STB joined an alliance devoted to the exclusive promotion of Ethereum, and even that SEC warned Hinman about the appearance of such conflicts. Separately, the government watchdog organization Empower sued the SEC to obtain those materials, and this is basically a breakdown of what we see up here. Now, what's crazy about this is, do you guys remember, if you guys don't watch them, it's totally fine. Do you guys remember this video? This got posted a year ago, November 3rd, 2021, by Blockchain Backer. If you have not seen this video, it is nearly 30 minutes of a full breakdown on just how the SEC stifled and killed XRP in terms of its price action. In this video, Blockchain Backer talks about just how XRP would be trading over $10, or I should say, in quotation marks, would have been trading over $10 during the last major bull run. And for those out there that are going to instantly say, what about market cap? Because XRP would have had, at that point in time, a market cap of over $500 billion, a fully diluted market cap of $1 trillion. I want to take you over to this. Here's where Ripple, aka XRP, because this was CoinMarketCap, they had XRP named as Ripple. We already know that that has since changed. It was number 2. And it was number 2 many times. Blockchain Backer actually goes over that in this video. where he talks about where XRP was peaking, where XRP was flipping Ethereum essentially. He was talking about the overall idea on where it could go in price action. This is an incredible video. If you guys haven't watched it already, I highly suggest you do. But he talks about how XRP would be trading at $10 if it wasn't for the SEC. And they did this because of how large XRP was. You compare it to Ethereum, you compare it to Bitcoin. It was so close. It was so close to flipping Bitcoin. It already flipped Ethereum. I want you guys to realize this, because as we focus on XRP and we focus on the sole, the main proponent on why they went after XRP, a lot of people just focus on the idea and like, okay, well, they were going after what Swift was doing and the traditional, financial players. So that's exactly why I got, focused on. Let's take Ripple out of the picture. Let's focus on just XRP alone. Okay, let's just focus on the actual digital currency, because Ripple doesn't mean a single thing to XRP. XRP is the most feared asset in this space because it challenged Ethereum and it challenged Bitcoin. It was so close to being the number one asset. As an entire group of retail investors, we all need to come together and we all need to see the clear intent that the SEC has for this asset class. It's not that they want to kill it. It's that they can't control this technology and they want to try to stop this technology from thriving to the point where they don't need to worry about it anymore. We are seeing this as a main action from the SEC, and this has been a main action from the SEC for so long. Announcement after announcement of the SEC targeting, every single major crypto project and major, crypto, I don't want to say influencer, but, main individual. They've been doing this and making an example out of these situations for so long. And the funny thing is that I just talked about this in a video where I was saying that they utilized the entire FTX situation as a main example on why crypto is a scam, why you should avoid crypto. Crypto is this, it's unsafe, it needs to be regulated, it needs strict regulations. They're just going to utilize the same exact thing with this. They're going to run circles around this and say, this is why we need to regulate. And it's all because there's conflicts of interest. There's, things that these individuals are invested into. There's connections behind the scenes, but also it's the idea that they can't control this asset class. And that is the big one. They want control. They are terrified of this technology. But also, the main reason on how the SEC hurt XRP at the perfect time, at just the right time, was the fact that XRP was heating up. And you could see it even on this chart. Look at this nice big move here, right? And think about it like this. This move was beginning back here in November. And here's the SEC. Completely spoiling the party. We had to rebuild all the way from the floor that we already built off of just to go to $2. Right? And it's just insane to me. It's insane to me that people don't see this. Everyone continues to say, XRP is a scam coin, XRP is this, XRP is that. Price out of the picture entirely. Look at the motives here. Look at the motives from the SEC side. Look at what they're doing here. Look at why they're doing what they're doing. And tell me there is no ill intent on the SEC side to completely kill crypto in America. And it's already happening. Outside of the US, this asset class is thriving. So with that being said, I hope that you guys enjoyed this video, because definitely leave a like, subscribe to notifications on, because of more free content. You guys are more than welcome to follow me on Twitter, and also join the free Discord down in the description below. So I hope that you all have a beautiful day, beautiful night, wherever you guys are in this beautiful world. This has been Nick. Peace out, guys.